Hello. Yeah, thanks. And welcome you all. And good morning, everyone. Thanks. I think we have been, since morning, we are talking about insurance and the risk. And primarily, most of the discussions have been hovering around risk pertaining to life or health, right? But the risk landscape has continued to be changed. And especially if you look at it from the pandemic case, when the COVID has, it's given a different perspective to the whole of the risk, right? And increasing cyber crimes, and these are the different dimensions of the risk are continue to change. And today with the panel, I will continue to the discussion, getting lead dive into that evolving risk landscape and how does it primarily insurers, technology firms are getting ready to manage those things, right? And then continue to build solutions to address this risk. So with that, I'll get started with Prasoon. Maybe you just can have a quick introduction, and if you can guide that how the entire risk landscape has been evolving, and how the entire digital transformation is impacting the actuarial functions which primarily you drive, because that's a different dimension that now the actuarial team has to look at it, those risks, right? So maybe you can just give your initial perspective.
Hi, good afternoon, everyone. So my name is Prasoon Sarkar. I take care of the actual function. I started my journey in a non-insurance background. I am from core engineering background, and then I switched to insurance. So I'm an actuary by chance. There was no passion for becoming an actuary in the initial days. So coming to the main point, I think, yes, I think with this digital transformation, I think we are seeing a lot of changes. we can talk about our actual function. So typically you'll see the actual normally, is a very stewardship role, more of a regulatory. But at ICC Lombard, I think if you look at our roles have gone beyond the stewardship regulatory role. We are embedded into multiple business areas, multiple business processes. Just to give you an example, on the sourcing models, so we have deployed sourcing models for motor, we have deployed sourcing models for health, and we have been able to deploy, machine learning models, also GBM, gradient boosting techniques for sourcing models for motor and health. Similarly, coming to the renewals, we have built renewal models, lifetime customer value models, propensity models. And on the claim side, we also deployed fraud models. And then we are also working on case reserving, help the claims team to estimate the case estimates for motor third party. So that holistic spectrum of, the cycle that we cover in insurance is we are also getting part of those as very much embedded into those business processes. Now coming to the one disturbing, talking about the impact on the actual function, I would say there is one disturbing trend I see, and this more for the budding actuaries, So I think for an accomplished professional, I think there are 3 skills which is required, especially from technical actual function. One is you have to have your knowledge of the core actual skills, the statistical skills. The second is the coding skills, and the third is the business knowledge. Now, over the years, recent years, what I see is the junior actuaries, they have fascination for, learning the coding skills. Again, coming from the digital transformation, of course, that should be the norm. But equally, they are staying and going far away from the business knowledge and the statistical knowledge at depth, which is what they find it difficult to even explain the outcome and explain the interpretation of the modeling outcome, to the business stakeholders. So that is one thing I just wanted to highlight. But opportunities, yes, as I say, this is a universe of areas we can, as an actual function, we can contribute. And there is a lot of competition power which is significantly helping us in this regard, we have been able to using a lot of techniques which primarily depends on the computation power. Earlier we used to find it difficult to find the parameters of a distribution. Now with this computation power, we can solve a lot of distributions, parameters which otherwise was not possible on analytical methods, simulations, especially. Challenges, as I said, just to cut short, challenges is something which I feel is still there in terms of number of variables, the data that we have, limitations of the data, the accuracy of the data. I think is all there, and I think, and even the expectation, customer expectation of seamless journey, and expectation of not nudging them for too much of information means we have to work a lot on the complex modeling in the back end, and sourcing the information about those variables from external sources and not nudging the customers is going to be challenging.
Yeah. So, and Mayank, I'll come to you and maybe you can quickly introduce. I think startup ecosystems with the blessing from investors has prompted to touch upon some of the non-touched area and bring some innovations. Similarly, in this evolving risk landscape in the insurance segment, how does the investors view this startup tackling these new risk solutions, risk segments, and how do you define a fundable model in this under insured market?
No, thanks, Shashank. Hi guys, I'm Mayank. I'm an investor at Fundamentum. Fundamentum is a growth stage VC, and I lead fintech and FS investing at the fund. And Insurtech is an area that we actively track. And certainly with the evolving risk landscape, one of the things that keeps us excited is the new opportunities, right? This feels like fertile ground, and I think this is the discussion we were having earlier when we were all seated outside. It feels to me, and again, I'm drawing parallels with where credit was maybe 15, 20 years back. It feels to me like, Insurtech and insurance is there because there was an NBFC moment in credit, right? And certainly when the NBFCs came about, there was a lot of innovation that happened because they went right to the customer, right? Solved for distribution first, solved for underwriting, understanding the customer. It was very data first. So there was that entire revolution that happened. I feel like I think today in insurance we're at a similar place where I think where that revolution is about to happen, and what makes it super interesting is the evolving risk landscape, right? And the opportunities that it presents, because now we're living in a world of data, technology. So there's a lot of underwriting that can be done. There's a lot of trust that can be embedded into products. And I think there's a lot of work going on there. So super exciting for us to sort of look at these spaces. The other question that Shashank asked, the kinds of models that we get excited about. I think we particularly as VCs get excited about models that push the envelope, right? And what I mean by push the envelope is where there is, access to maybe credit, access to insurance, increasing penetration of insurance, increasing penetration of wealth kind of products, because that's where real innovation's happening, right? Those are the hard parts. There are a lot of things, and if you go back in time, right? A large number of times you would come back with an answer that, it's difficult to go to, let's say, a smaller ticket insurance product or a smaller ticket credit product because the cost of delivering that service or the product was quite high. But now with technology, that actually is becoming possible, right? We've seen that revolution in many places, obviously in Insurtech as well, right? Like there are these sachetized products that are available, very contextually sold. So those models are very interesting. I think we're living in a paradigm where, we are now able to solve for an access to, let's say, insurance problem. And directionally, I think that's where we're heading. And that is the kind of model that we find super exciting. The other aspect of this, right, which is obviously the monetizing of it, which is super important in how we evaluate opportunities anyways, right? I think generally on the manufacturing side, we feel there is a lot of room for innovation. And what I mean by room for innovation is, when combined ratios are quite high, I think there is room, right? Right from distribution cost to claims ratio to actually underwriting this, and obviously OPEX in there, right? There's a lot of room for improvement, and I think that is what is exciting because that's where I think a lot of unlock will happen in providing access to the masses for products in insurance.
Thanks, Mayank. That's interesting insight. So now, Sahil, coming to you as a technical, maybe with your opening remarks. So how do you see that role of the technologies, primarily helping them to understand that this risk better, right? Because these are the new risks, right? And offer the contextual insurance by integrating the coverage with everyday consumer experiences, and especially with focus on some motor insurance.
So, what I would like to say here is that because a lot more data is being generated today, we have a lot more touch points to access customer information. So yes, the world is getting more unstructured, and as a result, the risk visibility is also becoming unstructured. But the way to manage it is that because we have access to a lot more data, there are a lot of digital platforms from, let's say, we talk about gig workers. They are not being covered currently through insurance, but let's say Swiggy or Zomato, they have a lot of data on their routes, on how they drive. That can be an input to the kind of underwriting models that we want to build. Then you have, like if I was to classify broadly, let's say from a motor insurance perspective, there are three broad categories of data. One is around driver quality, the other is around vehicle information, and the third we can say is environmental conditions. Now all three today we have data points on all three. The example I gave of Swiggy and, sorry. So the example I gave of Swiggy and Zomato, they have access to, how much, like at what speed their drivers are driving, or if let's say you look at telematic devices, they have access to braking data, acceleration data, what are the routes being taken. From a vehicle information, again, telematics have information on the engine quality, wear and tear status. In case of EVs, the battery conditions, all of that data is being captured. If we talk about dash cams, video data is being captured, which can tell us about the traffic conditions, the weather conditions, and even the quality of roads that are being taken. So all of this data can actually feed into predicting the accident probability or the damage to car possibilities. And so yes, because of the way the world is evolving, the risk is getting more unstructured, but it can be managed through capturing all these data points.
Thanks, Sahil. Now we'll little deep dive more into the risk, right? And Prasun will start with the. So these all risks, like be it you talk about the cyber crime risk, cyber-related risk, or climate risk, right? These are the emerging or the pandemic. They are low frequency but high impact ones, right? And you already spoke about that challenge for the actual teams, right, to look at it. So how do you see that actual models evolve, right, to address this kind of the risk?
Yeah, I personally believe that one of the biggest social service one can do is to predict the weather patterns. And I'll tell you, 15, 20 years back, I was wondering, how can one can predict the weather patterns. But I was fortunate to have a conversation with one of the directors at IMD, Indian Meteorological Department, and he was part of one project building the hailstorm prediction, using Markov chain model. So he took me briefly through this model. And today, if you look at that model, is able to predict with high level of accuracy the exact location of the hailstorm. Now, if you go beyond this, these models are extremely complex, and it involves ocean science, and geology, atmospheric science, and the other challenge of collecting the weather variables information on a real-time basis, and those sources also have to be authentic. Actuaries can play a big role here, but the only thing I have seen initiatives taken by the institutes, the actual forums to get into such modeling, but the unfortunate part is the data of the weather variables, is very distributed, is very unstructured, and that needs to be solved by some central agency or by some government agencies. Then I think the actuaries can play a big role in getting into this, predictive weather models. Now coming to the, what has happened in the insurance industry where actuaries can play a big role is parametric solutions. I think 2005 Mumbai floods, if you take the example, the taxi drivers were the biggest affected, I would say, stakeholders, and because they are daily wagers. So if there are heavy rainfall, they cannot go out, run their vehicles, so their daily wages get impacted. Now, one of these possible solutions which can really work is parametric solution, where it says that if your precipitation level goes beyond a threshold level, then you give a payout. Now, it solves two problems. One, the assessment of the loss which needs to be paid is not there because you said benefit product, you fix the amount what needs to be paid to the taxi drivers. The second is in insurance there is a long claim settlement process. You have to bring the surveyors do the assessment. Now, that can also be cut short. So actuaries do have a role to play in terms of determining these threshold levels, what would be the right amount of payout in such cases. I think that really helps. Second example I would give is if you look at the western part of the country and the central part of the country, they are frequently subject to heat waves during the summer season, you know. And a lot of people died, 40 to 50 deaths you will see every year. And even for the daily voyagers, it's a direct impact because they cannot go out and work. Again, a similar parametric solution can really help, you know, where if the temperature level goes beyond a threshold level, then there's immediate payout on that particular day or consecutive days to the daily voyagers. So that's on the, I think actuaries do have a role to play in terms of defining this term sheet and the structures and the threshold levels. Now on the cyber risk, I just wanted to highlight a brief point. Cyber risk is, I think for me, it's one of the most challenging topic I have seen because it demonstrates a very similar characteristic of a catastrophic event, because the contagion risk, the concentration risk of cyber is something which something I have not seen any established model is to quantify the level of total impact out of a cyber event, which otherwise has been kind of addressed through catastrophic modeling outputs, you know. But in cyber, we have not seen any established model yet to figure out the total amount of liability which can come out of a cyber event. And that is where I think actuaries do have a lot role to play to solve this problem.
Really, and good examples to given a context to all these different kind of the risk, be it on the climatic and the cyber. And Sahil, I'll come to you, right? You've seen that kind of the complexities that involve the unpredictability and the variability of this risk. How do you see the technology is going to play the role, right, to capture maybe some kind of the real-time behavioral data or the contextual data, right? And then primarily aligned to this kind of the risk, right, cyber and all these things. So how do you see that role of the technology to play, and especially also helping the actuarial team to do the right pricing?
I would like to add one point here. So the risks that we are seeing, they are intersecting with each other. So for instance, freelancers, they may not have the kind of income protection products that are required, but the same people are also, let's say, transferring company data over unsecure servers, leading to cyber risk. So in essence, the risks are moving from one domain to other. Let's say something which is a weather risk becomes a livelihood risk for the, a farmer or for any daily wage earner. So how to address this is technology is capturing a lot of these data points. Like I mentioned earlier, that was most focused on motor products, but a lot of lifestyle related data can be captured from e-commerce companies. Companies like, let's say, Spinny or Cars24, they have service history for used car sales data. So the entire industry is sitting on a lot of data points, and insurance companies can tie up with them to offer contextual insurance. Some examples can be like how IRCTC and, let's say, Ola, they offer for every cab ride, for every train ride, certain, ₹1 insurance or some decimals insurance. So that is the way I feel industry is going. Contextual insurance at the point when the sale is occurring, because that is the point when the customer is also thinking about the risk. Otherwise, it becomes a push product. So that's all from my side.
Thanks, Mike. So, thanks, Al. So now, Mike, I come to you. You have heard both the sides, right? So now, in this case scenario, how will you assess any startups who is working in this space, solving this kind of the complex risk models, right? How will you assess, and what will give you confidence that they will be able to walk through this, complex market and also make money, right? Ultimately, it's all about that making money, generate the revenue. So maybe you can just deep dive into that.
Just, I think, before I answer that, the previous question, right? I think we've obviously looked at interesting models across. And one of the things that we've realized with, the whole LLM wave with generative AI, right? Like context is everything. And, even in the example that he offered, right? Like I think context matters a lot in how you underwrite, what product is offered. And for us, I think we imagine a future which I have called, and again, I think this is obviously famously written about, is embedded everything, right? So there is a future where everything is embedded into somebody else's stack. And that's where you get the right context to be able to offer the right product, right? So directionally, and now coming to the question you asked, right? I think founders in FS, I think we've generally seen founders who come with a lot of experience and understanding of a space actually tend to do very well. And that obviously plays in because these are like, to navigate the regulatory risk landscape, it becomes very complex, right? And I think founder market fit particularly is ultra important for us when we sort of look at these spaces because, the context or the learnings from, let's say, what he mentioned just now, is lost on, people sort of trying to reinvent the wheel in many cases, right? So we've seen that actually founders who come from the industry, who bring in that sort of experience with the technology, or with the view on technology and, how data and tech will solve for underwriting and, maybe even distribution in the future. I think those founders tend to actually end up doing better, and therefore part of our key evaluation criteria. See, the other aspect on this entire piece is our ability to be able to, or the founder's ability to be able to understand risks, right? See, again, when you think about insurance, there is, and risk can manifest in very interesting ways, right? And again, catastrophic events potentially. Founders that understand risk resilience are building with the right tech, and more importantly, building with the right distribution-led approach, right? Which is that, how am I going and solving the problem for the person on the ground? And we've seen that being done beautifully in credit and other spaces in FS. So I think those nuances matter a lot, right? So somebody who comes with a lot of experience, understanding, understand risks, understand how to build a resilient business, but more importantly also understand how to build like a distribution first business, where you embed the understanding of distribution into your risk models, into how the monetization happens, certainly makes a big difference. So I think that's how we're sort of looking at it. But yeah, interesting space that's evolved.
Thanks, Mike. So, but I will like to extend it further. So you rightly pointed out that the experience, right, of founders are gonna matter, because as the person talk about, like he's referred to some of these examples. But since this entire the domain of the risk is continuing to evolve, and some of the customer segment that, as Sahil has spoken about, like gig workers and all these things. So apart from the understanding of that, the founders having the knowledge, how do you assess that they're gonna ready to able to address, based on their solution that they're bringing, will be able to address that all the emerging kind of the risk also in the future? So how will you
see? I think this goes back to this idea of first principle thinking, right? Which is, being able to take understanding from something that you've already worked on, frameworks that you've seen before, being able to sort of go down to the building blocks of the thing and then build something back up, right? I mean, when, let's say, an Elon Musk lands a rocket back, right? That's sort of an example of first principles thinking. It's very similar. I think we see with stellar founders that they're able to take their learning from elsewhere and apply it into these fields, right? So, for example, the examples that both of these guys have offered, right? I think there is a deeper understanding of the topic. And so when they're able to unravel that, understand the building blocks of it and then take that understanding into, the newer risk paradigms that we're seeing, I think that's when you get to solve some of these things, right? So, although you've seen something else before, the frameworks sort of translate fairly well, and great first principles thinkers are able to translate those and actually use those in these changing contexts.
Yeah, thanks. I think all of you has spoken the role of the data and the AI to play in this kind of things, right? And I think we are moving into that world where lots of the data is, even the climatic risk, if you talk about it, or some of these methods that insurance companies are using, be it on the telematics or any sort of it. So maybe person, I'll start, come to you, that how do you see that actual team or the insurers are adopting this data and all sort of the data, be it the behavioral, be it the transactional kind of the data through telematics or the wearables and all these things, and aligning it, embedding into your entire the risk assessment framework for the existing risk as well as that for any kind of the new risk which emerges.
Yeah, so I think this is, big area of transformation which is required in the insurance space, especially in the GI space, non-life space. So just compare with the US and the UK economy, the amount of personalized information which is being used in, say, retail policies like motor and health, we are far lagging behind, and unfortunately, one point I want to mention is that if you look at the telecom sector, or even the banking sector, if you look at the data, there is a significant level of structured data you will see in those sectors versus insurance sector, which is very unfortunate because insurance is far more technical subject. But anyway, coming to the point, we have a far areas to cover in that regard. But just to mention one point, there has been made some good progress by some of the insurance companies. For example, we have started using telematics data for offering pay as you drive, pay how you drive. We also been using civil score data. Then recently, I think some companies have started exploring challan data, even though it's not a personalized information, but kind of proxy to certain behavioral patterns. Then we have used hypothecation data. Then salary income levels also has started coming into a mainstream rating factors. So I think a lot of progress has been made in this regard as of now, but it's a long way to go. Similarly, in health also, if you look at a lot of wearables related informations, are being consumed, but not for the mainstay rating engine, but for programs like DMPs, disease management programs, where, by taking the inputs on this tracking, through these tracking devices, you intend to influence the behaviors and the habits of the customer. That's a different challenge. Indian customers are more comfortable with their family doctors, hence it's a different challenge. But again, coming back to the point, actuaries have a lot of problems to solve within these dynamics, because, for example, in telematics also, say company one is using and deriving the correlation of the claims impact and the driving behavioral patterns based on his insured data, which is sample one. Similarly, other companies doing on his insured data, which is sample two. Now, obviously, if you train the same model on two different samples, the outcome will be different. But what the risk carries is getting, what the risk as the concern for the business stakeholders is the competition loss. You may see, because of the arbitrage which gets created, one may see, customers flowing to the other companies. Similarly, if you look at the wearable information for DMPs, now if you go to US and UK economy, you'll clearly see the data which is consumed for assessing the correlation of the actual claims impact versus the, say certain interventions through this wearable information. Their horizon of data is very long, 25, 30 years, and they have been able to fairly estimate the exact correlation. India is struggling so far because the horizon of data that we have so far, because of the interventions impacting the final claims, is very small. So their actuaries have a big role to play to keep on recalibrating these models and refining their outcome. Just wanted to give another example, personalized information, so for example, dental insurance. Dental insurance, I think, is something which is unexplored. It has been explored, but there has been a complete failure in the past. Dental insurance, as you all know, is a high frequency event. So customers easily see value in that product because it's an experiential product. But it has also been subjected to a lot of anti-selection and moral hazard and the fraudulent losses in the past. And hence, any dental insurance did not pick up. Technologies can really solve this problem. Again, coming out a solution which can really figure out at the time of sourcing what the number of tooths which are in good shape versus which are not in good shape, and then you can offer insurance solutions to only those which are in good shape, in a way protecting the anti-selection, addressing the anti-selection issue. But technologies can really solve this, because you cannot ask the customer to go to a nearby clinic and get a dental fingerprinting at the time of sourcing. You can use a simple mobile video or mobile picture and run through an application and get the dental fingerprinting at the time of sourcing without creating convenience to the customer. Is something, again, personalized information is being conceptualized. I'm sure many startups have already worked on this and perhaps closer to finding that technology solution to address this. It's a huge market, 12 to 13,000 crores market, dental insurance, but everyone is concerned about the losses which are given in the past.
Thanks, Prasun. So, Meng, I'll come to you. I think as we've seen, right, the role of the AI analytics is going to be critical. So, how critical it is from the investor point of view when you're looking at that, any Insurtech who is building a solution for that, the role of the AI analytics getting embedded into that platforms to manage this risk?
See, on the AI front, right, and I'll actually separate out like generative AI from, AI or decision sciences models that we've been using in insurance and other areas for a while. I think both areas are exciting, right? On the one hand, I think getting like the right models, the right data in place, I think is ultra important. I think this is a subject that I think he touched upon in this discussion as well. I'll maybe focus a little bit on the generative AI side. I think what we've realized over a period of time, right, that in insurance, I think there is a lot of operational cost in claims, there is a lot of fraud, In underwriting, there are a lot of manual processes. There are actually a bunch of activities that are very repeatable in nature and sort of the workflows of those in many ways can be automated, right? And directionally, I think we're obviously meeting startups that are solving for those. And, we like to categorize these companies in the form of, what we like to call AI services, where we're saying that, a sort of old services, tech services company would go in and solve for use cases inside these large insurance companies. And the use cases could be varied, right? There are interesting examples of somebody doing some analysis on video, somebody doing some analysis on changing workflows, right? Turning unstructured data into structured data is a huge problem. And I mean, we've seen a very large industry. US medical coding and associated industries are huge, right? So I think there is directionally a lot of meaty problem, very large meaty problem to solve on just the workflows aspect of it. And where we are coming from is that I think if we were to sort of think about today combined ratios that are, maybe close to 100%, more than 100% in many cases as well, right? What we're realizing is that there is some value on the table that can be solved for through automating some of these workflows through AI. And there is a lot of interesting startups that we're seeing that are trying to solve for those problems. So certainly very excited about the opportunity generative AI presents. And again, I think from the analytics point of view, I think he's touched upon that in this discussion. I think certainly with structured data coming in, contextual data coming in, insurance being embedded in many platforms where, it is, again, very contextual information sort of comes in. Underwriting starts to improve. So there is a lot of work that is being done there as well. But I think focusing more where I think we are seeing more startups today is, workflow automation, the AI services nature of these businesses. And that is certainly exciting. And there is a large opportunity there for somebody to build a business.
Thanks, Mike. So, Sahil, now, before opening the floor for the questions, maybe last point to you. You have been building, Zoop has been building the solution for the insurance. Maybe if you would like to share your experience of maybe challenges, adoption issues, or limitations to build for building the digital platform for the insurers.
All right. So from a user perspective, when products are being built, there are two things to focus on. One is the short-term speed at which they are able to go through a journey. So you want to enable your users to able to buy an insurance policy in least number of steps, which means most of the data points that they are entering, you want to replace them. You want that to, let's say, come from third parties or other sources, and maybe just get them validated by users so that the transaction happens quickly. However, the other side is the data needs to be really accurate, because if there's any issue with the data, you're underwriting based on the wrong parameters. So to solve the trade-off between speed and accuracy, the quality of data needs to be really solid. And how this manifests in insurance journey is that the purchase journey can happen quickly and with a lot of ease. But if there's wrong data, that will lead to unnecessary endorsements down the lane. It would lead to hassles during claim, which is not a great customer experience. So if you see it from an entire customer life cycle, it's very important that we get right quality data, and Zoop offers products around, Vahan services, IRDA based sources that take care of this.
Thanks, Sahil. Maybe any question from audience, we'll be happy to pick it up. If any specific questions to any of the speakers, maybe you can suggest. Yeah.
Hi, good morning, sir. Good morning, everyone. So, sir, there's a slight concern on the health insurance part of it. And in a large country like India, almost 140 crore people, the premiums tend to increase, and obviously the hospital inflation is also going very high year on year. So, and we being the tech leaders in the entire world, why it is that transparency in health data and transparency in health underwriting, and especially with the insurance companies, why it is taking so much time is my concern, and why cannot we not expedite it and become like in motor, for example, we are using challans. ICICI Lombard is using challans also. It is doing a lot of work on the back end in the CIBIL and the tech side, integrating customers. So is there a concern that a lot of transparency might lead to a lot of claims being paid? So that's my question, sir. Thanks. Thank you.
No, thanks for that question. Very interesting. Actually, we were having discussion just before the panel, discussion here. So if you just follow the regulations which came in 2024, and hats off to the chairman who was, there, and just see through those regulations, which came in 2024, the master circular which came in 2024 related to health. You'll see there is a significant amount of changes which have been made. And now literally the companies are struggling to maintain some of those standards. And the objective is rightly what you said, to bring that transparency, bring that seamless experience to the customers. I'll just give you a few examples. For example, customer information sheet. Now if you look at the regulation, they clearly say they have to make it crisp and to the point. If you put too many points and too many things, customers do not have that kind of skill set to understand and decipher those. So you make it very simple. Now when you are having conversation with the regulator, they are saying that instead of 6-page, make it 1-pager customer information sheet. And some of the companies like us, we already had started, taking that initiative to make it from 6-pager customer information sheet to 1-pager customer information sheet, which is very, very crisp and clear and simple language. The other efforts which we are making is the extend it to vernacular language, local language. So I think 3 languages we already converted, and now I think another 6 will be there, and we'll slowly progress towards converting to all regional languages of that 1-pager customer information sheet. Similarly, on the claim side, if you look at what is happening is on health, there is a regulation which came in 2024. It says that you cannot repudiate claims on non-submission of documents. And you have to make, to the insurance company, what it says that you have to make an effort to collect the documents from the hospitals. So right now we have already initiated a process at our end to, of course, officially notify to the customer for seeking the document, but at the same time make our efforts to collect the documents from the hospital through our sources, our employees, our various teams. And within 15 days, if it doesn't come, then we close the claim and again reopen subject to receiving the documents. So there are a host of changes which have been made in 2024, and that's why you see a lot of news on the health coming in. Inspections are happening. Regulators are visiting the offices to see whether those new standards are adhered to, which came in 2024. And I'm sure directionally we are going to address some of the issues that you just pointed out.
Thanks. Thanks. Yeah. Maybe.
Hi, my name is Kriti, and I'm from Shabd AI. So we are into document localization and all. And just adding on to what he's saying, unfortunately, in all the interactions that we've had with multiple insurance companies and all, we've had to justify the fact that, we can do it easily with an API integration from the platforms. What is the intent? Is the intent to educate the customer in the language that the customer understands? Because your APIs, those platforms don't give you conversational language. So is the intent to give information, or like you're talking about the customer information forms, right? It's so convoluted, even for a person like me. So when you go into tier 2, tier 3 cities, we are into content creation, and we are seeing this repeatedly. There's a lot of pressure in terms of getting the work, but there is also this belief that, it's easy to do that through the platform. Why should I pay you? Even if you are providing me conversational, understandable content to the consumer. So that's my question.
Yeah, so intent is there and more driven by the regulatory forces, to be very honest. As I said, again, extending those points that I highlighted in the regulations which came in 2024. One of the initiatives that we started as a company is the conversation during the claim process. One, of course, I talked about the customer information sheet, which is at the sourcing. But at the time of claims also, see what happens, most of the times, the customers see a value, total, this has been paid. Then he said, that I was committed this and there is a 30,000 gone and there is no explanation.
Absolutely.
See, either you explain or you say, or you made a mistake, you reimburse. That process also has started. When we see, this is again outcome of the inspection which have happened recently. They categorically found out that you have not communicated the breakup of the things that you paid, number one, and if you've deducted based on certain thing, which is also not legally viable. So all these things have come out. And there is now serious intent by the companies to get into that conversation, explaining the right breakup, explaining why it has been repudiated for so many reasons, deductibles and other policy coverages. And if we also see in cases where we have deducted, which was perhaps could have been paid, we are paying back. So things are moving in the right direction. Things are changing. It will take time. That, I see, because see, people have kind of, it's a cultural change, to be very honest. It's not going to be easy. Mindset, like you said, there has been resistance from the insurance companies giving you this kind of explanation. It is a cultural change across organizations, within organizations. So things are changing and intent is there.
Sure, thank you.
Thanks. So I think we've come to the time, but I think it was an interesting perspective. Thanks to my panelists. Thank you for taking our time and sharing your insights. Thank you very much.